Welcome to FX Street. My name is Adam Rosen. I will be your host for the next 43.5 minutes or so. What we're going to discuss today, and I'm so glad that you could join us, we're going to take a step back and go back to the basics a little bit. We're going to discuss what I love, one of my favorite indicators, the first indicator I actually learned how to use, the RSI. This may be a little bit of review, but review is good. I hope it will be entertaining. And if you have any questions, please don't hesitate. Chat them at any time. If you can't see the charts, please let me know. The RSI, Relative Strength Index, was an oscillator. It measures the market's up movement versus down movement. Now, what we do is we plot the RSI as we have on the chart below. It's plotted on a scale of 0 to 100. Indications above 70 are considered overbought. Indications below 30 are considered oversold. The 30 line is the bottom white dotted line. The 70 level is the top dotted line. Now, what does it mean when a currency is overbought? We're seeing right now euro dollar. Hey, European Central Bank left rates unchanged. Euro explodes 155.62. The RSI is actually above 70. We're at about 70, 71 roughly. At any rate, is this a good time to sell? No. When the RSI crosses above 70, it tells us the market is strong. It is firing on all cylinders. It's moving up to the greatest degree. It can probably move up more. However, when the RSI crosses above 70 and back below, as we see in the previous example over here, we're going back on a 1-hour chart. This is June 3rd. The RSI crossed above and back below 70. As soon as it crosses below 70, that is the appropriate time to sell shorts. We can plot our little mouse over here and say, hey, this is when the RSI crossed below 70. It's that first red candle. Beautiful. Sell short. The high was 156.26. Place your protective stops above the highs that were achieved while the RSI was in fact above 70. Give yourself a little bit of breathing room. And we see from 156.25, we sold off initially to lows 154.10. Not too bad. We're looking at 1, 2, 3, about 4 or 5 candlesticks on a 1-hour chart. 5 hours, 200 pips, not too shabby. Now, the opposite also holds true. When the RSI crosses below and back above 30, which it barely did, my indications here say 29.7. When it crosses below 30, it means the market's going down. When it crosses back above 30, it means the market probably has gone down. The probability is the market's gone down as much as it can, and it is an appropriate time to go long. Going long here, we can see, well, the bottom was right near 153.84. Place your protective stops below the lows with breathing room. Why? Because we see the market actually made a little bit of a lower low. 153.84, we went to 153.65. Long candlestick wick. Now, this is very important. Notice the position of the RSI. When the market makes the first of the double bottom, the RSI is below and back above 30. When the market makes the second double bottom, actually making a lower low, the RSI was significantly higher. It wasn't below 30. It was actually probably around 40-ish. This is known as divergence. It's a very important concept when trading the RSI or MACD indicators. Divergence is disagreements. We see the market made a lower low. Logically, we would expect the RSI to make a lower low. However, the RSI, the way the math works, it measures the previous 14 periods. On a 1-hour chart, it's looking back 14 hours. And it takes sort of the average. I say sort of because the complications, the mathematics is a little more complex than that. But essentially, when the RSI fails to confirm or fails to do what the market has done, this is divergence disagreement. It's your extra confirmation to take the trade. Okay? Obviously, it's very important to place your stops with a little bit of room so that if the market makes a little bit of a lower low or a higher high, we're protected. Now, currently, RSI is above 70. Or just basically at 70. I see a value of 69.859, 70.5. Look, I mean, if it goes to 68 or 69 and then reverses, not to say I would not take the trade, but I like to use the 70 level because it helps filter out a lot of those trades we have no business being in. Now, if you find you're still taking too many trades with the levels of 30 and 70, try using 20 and 80 or 25 and 75. I always use 30 and 70. Why? The majority of the chart packages out there just simply automatically use 30 and 70. I want to see the signals that everybody else sees. I know that plotting on a 1 hour chart, I'm going to plot the RSI in the standard format. I'm going to show, or my chart will show me, the same indication that you're probably watching. And I like to try to anticipate what other traders will do. Well, other traders, once this RSI crosses back below 70, traders may sell short, placing their stops above the highs. So far, the highs are 155.63. And maybe we have a reversal. Now, this approach is used, well, this is a range-bound quasi-trending market. During trending markets, a trending market is a market that has the potential to make higher highs or lower lows. We can use the RSI to pick tops and bottoms with caution. In a range-bound market, we may not see the RSI cross above or back below 70. I'm going to show you right now, actually. This is the dollar CAD daily chart. Now, the previous chart was a 1 hour chart. We can apply the RSI to many different time frames. It really depends on your style of trading. Medium-term traders may use a 1 or 4 hour chart. Long-term traders, daily chart. I personally don't like to use anything less than a 1 hour chart just because I find it generates way too many trading signals. At any rate, dollar CAD daily chart, this range was established way back when. Well, way back, we're looking at, and I'll show you how I draw these lines. This is just an approximation. This trend began back in November of last year. The dollar CAD has, without any kind of power, failed to break below 97.50, the bottom line, or roughly 102.50, the top line. And you may notice the center top actually crossed above and back below. I like the line like that because it looks like a little bit of a head and shoulders pattern. The first shoulder high, 102.47 on December 14th. The head at the top, 103.78, January 22nd, Happy New Year. The third top or the second shoulder hit highs, 103.26. So with that said, because the markets failed to break above or below, we should use a very simple buy low, sell high approach. Notice the RSI, 65.39. Went up again, 69 again. Went down again. Where did we go? 32. 62. Even most recently, we sold off, but the RSI only got to a level of 33. We failed to cross below 30. We failed to cross above 70. Now, I will bet every demo dollar I have that when the RSI eventually crosses above 70 or below 30 on a daily chart, it will probably be indicative of the next big move. We may have a little bit of false breakouts, but watch the RSI on a daily chart, the dollar CAD. We can continue to play the range. That means I want to look to sell short near 102.50 or 101.92 right now. I have about another 60 pips to wait, but it's getting close to an area that could be very interesting. Of course, if the market goes above a new high or goes to a new high as the RSI crosses above 70, this will be the first time the RSI did cross above 70 in a long time. The question, Bill, what are you applying to the RSI, for example, weighted close, typical price, etc.? Great question. I always use just the standard RSI, which I do not believe is weighted. It goes back on a 14-period scale, and it uses the closing price. The closing price. Some indicators we can say, give me the average of the opening price. Give me the average of the high price. I like to use the closing price. That's why you may want to wait. If the RSI is above 70, you may want to wait for that hourly candle or that daily candle actually close. Just an extra source of confirmation. By the way, if there's any specific currency pairs who've had a lot of moves that you'd like to look at, please don't hesitate. Chat them in. I'll be more than happy to jump right to them. Let's look at, what are we going to look at? Oh, here. This is a juicy one. Here's a pound dollar. 195.52. And we're off to the races. Now notice the RSI as we cross below and back above 30. Well, here, where do we get to? We got to a level. Whoops, that's not what I want to do. 31. Not official yet. Well, here, we got to a level of 30.8. 29.2. What do you say about pound yen? The pair is a bit pound yen. Wow. Yeah, pound yen's next to my list, really. There's a lot to talk about in terms of the pound yen. Notice over here the RSI crossed below 30 to 29. The market made a new low. Now the RSI went back below 30. There is an additional filter we can use. We can say, hey, I want to go long the pound dollar under two conditions. The RSI crosses below 30 and back above 30, and that the RSI remains above 30. Notice here the RSI crossed back below 30. In this case, for us to go long, when the RSI crossed back above 30, the closing price here is 195.10. The RSI crossed back below 30, it went down to 194.61. Now, we can either use a generous stop, or we can choose to close a trade and re-enter when the RSI crosses back above 30 again. It may mean, and it really is up to you. Some traders like to open the trade and they say, hey, it doesn't make sense anymore. I want to get out. I'll get back in when the RSI crosses back above 30. Other traders say, hey, why am I taking a loss? I'll leave my stop order in. If I get stopped out, I'll wait for a lower entry. The second is my choice as well. I mean, this is the way I like to trade. I'll take the trade with the RSI as it crosses back above 30. I'll place my stop order. I'll use the charts. I'll use, very logical, I'll place the stops at a logical spot. And then I'll wait, and I'll let the market hit my stop order or reverse and then go back to the upside. If I get stopped out, I sit back. I say, okay, it's not right. It's not the best thing that can happen, but I'll take a step back. Let me reevaluate the charts. Let me sit back patiently. Let me wait for the markets to open again. Let me wait for the market to cross back above 30. Let me wait for the RSI to show me another buy signal. Then we can give it another chance. Now, I wouldn't give this, an unlimited amount of chances. I usually give the trade 2, maybe 3 times at the most. In the case of the RSI, I think you're either going to get it right or you're not. And there are other filters we can use. Polly G asks, closing and then reopening the same order is a bit aggressive. Yeah, it is a bit aggressive. I don't want to say that and lead you to start opening and closing trades. I just mention it because it is an alternative. Personally, I take the trade. As a friend of mine once told me, an excellent trader, he says the reason you get in the trade is the reason you get out of the trade. And I get in the trade because the RSI crosses above 30, back above 30. I think this is the end of the downturn. I'm going to get in. If I get stopped out, okay, I get stopped out. It does happen from time to time. But I'm not going to close the trade prematurely. Now, there is an additional filter that I can use, that we can use. This is the time of the day. The time of the day is very, very important. We know markets tend to become active during the U.S. Open, 8 a.m. Eastern. They tend to remain active for the next 2 to 3 hours, 8 to 11 a.m. Eastern, 8 to 12 p.m. Eastern, around noon time. Then the traders go to lunch. They stop pressing the buy and sell buttons, and the market has a greater chance to reverse back towards the middle. But I don't want to buy lows or sell highs 8:35 in the morning when the non-farm payrolls is released tomorrow morning. No siree. I want to wait till the market has a greater chance to return towards the median, the mean, I should say, of the average. And Japan markets usually become active around 7 p.m. Eastern, so around 9, 10, 11 p.m. European session officially opens 3 a.m. Eastern. Sometimes you have some moves at 2, but it's usually around 3 to 5, 3 to 6. Do you use other indicators along with trading, like pivots, Bollinger Bands, moving average, MACD? Jose, very good question. I will not use another oscillator with the RSI. I only like to use one oscillator at the same time. An oscillator is the RSI or the MACD or the, moving average is not really an oscillator. I'm not a huge fan of moving averages. I think they're a little bit late to the game, so to speak. Bollinger Bands, those are all oscillators. Oscillators, again, are indicators that measure the up movement to the down movement. Now, on the other hand, I will always use and I will always begin with support, resistance, Fibonacci. Those tell us, those tools, support, resistance, Fibonacci, tell us the horizontal price levels that we think the market has a good chance to bounce off of. So I want to use support, resistance, and Fibonacci in conjunction with the RSI. The RSI is a little bit more of a sentiment gauge. It tells us that the market's feeling strong, or the market was strong and now it's feeling a little weaker. The market was weak and now it's feeling like a little bit of recovery. It judges, for lack of better words, it gives you the feel of the markets. The current trend or tone, I should say. Horizontal price levels are completely different, though. Those I always use. What about RSI crossing 50? I've heard this before. I have not found any way to make this work, honestly. The 50 level is exactly in the middle. the RSI has the greatest chance to go to 50. But when the RSI crosses above and below 50, I really don't think it means anything. Some traders will say, yeah, I'll buy it when it crosses above 50. Not to me. It's just, personal preference, but not to me. Let me show you another chart. I'm going to give you another application for the RSI. All great questions, by the way. Now, while the markets are active, we can also use the RSI to look for breakouts and breakdowns in the markets. Here's how it works. What we want to do is identify our support or resistance levels. This is a dollar-yen 1 hour chart. We see the significant high we hit was 105.55 on June 3rd. What I want to do is only buy a new high. 3 things have to occur. I don't like to buy breakouts in the foreign exchange market. I don't think it's the right way to trade the FX market. There's too much volume. There's too much of a chance of retracement. However, there are very specific times that you can. And I think you can with a good amount of accuracy. I need 3 conditions. You want to jot these down, or I can type them in too. 3 conditions to buy a breakout. Let me type in breakout. First of all, I want to only trade during active market sessions. That's number 1. Number 2, I only want to buy when the RSI crosses above 70, obviously, or below 30 to sell shorts. And number 3, I want to make sure that the market is at a new high or low. Very important. Those 3 conditions have to take place in order for me to buy breakouts. Notice over here, the market makes a little bit of a new high, but does the RSI above 70? No. RSI now, and I really want to wait for the candlestick to close. I want candlesticks to close. That actually could be number 4. Wait for the candlestick to close above support, resistance, or obviously below supports, but just to keep it simple. So this candle over here was the first, and we're looking back, what's it, 10:20 a.m. Eastern? We're looking back, let's count back 1 hour candles. 1, 2, 3, 4, 5, 6, 7, 8 candles back. We're looking at 8 hours ago. This is about 3 a.m. Eastern, if I did my math right. 2 to 3 a.m. Eastern. Is the market in an active session? Well, the dollar-yen typically is not active, not very active in the European session. But when the euro starts to move, the euro-dollar, it will move the dollar. And it will move the dollar-yen at times. So technically, yeah, it was an active session. Did the candlestick close above a new high? Yes, it did. Did the RSI, was it above 70? Yes, it did. Now, where do I place the stops? If I think the market's breaking to a new high, I don't want to see it to cross back below. So this 105.55 former high, this becomes my new support. Place my stops below it. Now, this is a day trading strategy. When do we get out? Quickly. 70, and obviously on a longer term chart, a daily chart, you're going to hold the trade a little bit longer period of time. But notice that the RSI crossed back below 70. This was my signal. Adam, get out of the trade. Because what happens when the RSI crosses back below 70? I'm looking to sell shorts. So this is one of those situations where we could have bought 105.60, let's say, or maybe a little bit higher than that. Took the trade up to, well, we went to 106.42. I'm not going to be so arrogant to think we could have caught the top, but we would have been able to catch 40, 50 pips conservatively. Now to sell short the dollar-yen, if we think this is the appropriate trade, place my stops above. I don't really like to get in, to go long, and sell short, long, short, long, short. I like to take a trade and close it, count my profits, and then, with a clear mind. I find personally I have a much more of a clear mind when I don't have a trade open. But with this type of situation, yeah, you can do this. How far back did you look back for the new high? Great question. The longer we have to look back to find a new high, the more significant it is. I don't have an exact answer for you. On a 1 hour chart, how far back do we go over here? I'm guesstimating this is 20, 30 candles back. It has to be significant. How do I know it's significant? Because after we went to 105.55, we pulled all the way back here. So this tells me that if we break it this time, it's that much more significant. Now, if I would have taken the trade You know, with the double top was a little bit closer. Yeah, I would say, I mean, it's a very subjective type of answer. I would say use your own judgment. But you want the double top high. In the middle of the double top, the criteria is you want to have a deep pullback. You want to see the market pull back. It's not the case where, you know, these two double tops, these two most recent candlesticks, that's not enough for me. I want to see 10 candlesticks on a 1 hour chart in between the double tops. Here we have, I think, probably 30 or so. I mean, let me look at the time. This is June 3rd, 5th. This is 2 days. This is what you, on a 1 hour chart, you're going to look 1 to 2 days separation. What do you think of using a moving average on the RSI buying the cross? I've never done that. You know, I've tested a number of strategies, automated trading systems with moving averages of RSIs and moving averages of MACD. I like to keep things simple. I mean, if you listen, I'll say this. If you find a way that it makes money, stick with it and tell all your friends. But I personally, I haven't found it. I like with these indicators, I like to keep it very, very simple and you know, straightforward, so to speak. But if you found a way, you know, by all means, let us know. This is the dollar Swissy. Look at the cross down below 30. RSI crosses back above 30. Beautiful trade. 102, where was the lows over here? 102.75, 102.81. Let's say we waited a couple candlesticks even to get in near 103. Not too bad. We waited 1, 2, 3 candlesticks. From 103, we went to 104.90. Now, obviously, this is not going to happen all the time. But sometimes we can find these breakouts. Here the RSI, now let's draw the highs. Did the market make a new high? Let's see if this was in fact a buy breakout signal. The high 104.90, I throw 91, close enough, 104.90. Now this breakout took place. Did the RSI cross above 70? Yes, it did. Did the candlestick close above the new high? Yes, it did. Was this an active market session? That is the $5,000 question. 1, 2, 3, 4, 5, 6 hours ago, 6 hours ago, 5 hours ago, we're looking at 5 a.m. Eastern. The market had already started to cool off a little bit. And obviously, with the dollar Swissy or any of these pairs, in this particular case, I don't want to build a caveat into every trade and say I would have taken this except for that. But today, given that we had the European Central Bank, Bank of England meeting, you know, really, I don't want to take any kind of trades at all. So you take the counter trend trades, or should you stick with the trend as preferred? JS, excellent question. I'll tell you something above everything else. I'll stick with the trend. I stick with the trend. The trend is your friend. If I'm looking to buy low, sell high in a range-bound market, I want to buy low only if the trend is up. If I'm buying new highs, I only want to trade in the same direction as the trend. It will mean I will let trades go by. You know, this doesn't mean that if I'm long and the market pulls back, I might not hedge myself or maybe take a short-term trade, but not the same position size. The bulk of my trades, I fundamentally, personally, I'll tell you, I think the pound dollar goes down a lot more. I think that the Bank of England will start to cut rates. I think the Fed is pretty much done cutting rates. I think fundamentally over the next year or so, I think the pound dollar goes down a lot. I'm going to look for breakdowns in the pound dollar, but more importantly, when it rallies to a technical level, I'm going to look for an area to sell shorts. Let me look at the pound yen. I don't mean to ignore you. I completely forgot, but not for long. Pound yen, does anybody have a preference as far as 1 hour chart, daily charts? Go to our signal, our indicator list. 1 hour. Alrighty then. Pound dollar. Pound dollar will go 1 hour and then 4 hour. The RSI initially crosses below 30 over here. Let's place this little mouse over there. Alrighty. The RSI crosses below 30. Excellent. Is the market at a new low? Yes, indeed it is. Did the candlestick close at a new low? Yes, it did. Is the market during an active period of time? I believe it is as well. Selling short at 206, the closing price of this market is 206.23. 206.23, we went down a lot. Look, when the RSI crossed back above 30, the market was at 205. Not even catching all of this trade, it was still 100 pips in not about 12 hours or so. Now, let's say we decide to go long. This is the problem with my friend Mr. Pound Yen. The low is 204.66. I want to place my stops below the lows. We went from 204.66 to 204. We went down 66 pips more. If we'd held on to the trade, obviously it would have been a lucrative trade. I'll tell you something, Pound Yen, whatever stop you use more. It's a very volatile currency pair. Typically on 1 hour, 4 hour charts, I like to use a 100 pip stop. On daily charts, I may move up to even a 200 pip stop. If we'd use a 100 pip stop, we would have been able to ride the wave 66 pips lower. Not the most comfortable feeling in the world, from 204.66 down to 204 even, but it would have kept us in the trade. And then notice the market rallies from 204 to 207, not too bad. Hey, let's say we didn't take profits because you know what? The RSI never crossed above 70. Doesn't mean we can't take profits. I probably would have, because I gotta tell you, this is the former lows of 206.81 on May 29th. Former support becomes new resistance. Let's mark this line off actually. See how this works? I'll tell you, I would have taken profit. I was not involved in this pair, particularly at this point in time. But if I was, I would have wanted to close the trade right here. I would have gotten very, very nervous. This floor that was broken, I would have suspected is becoming a new resistance. But look at this. The market came down again, failed to make new lows, and the RSI failed to cross back below 30. Not a bad spot to go long. This was also, the real intriguing point of this chart is an upside down head and shoulders. At 204.65, the first time it hit it, that was the first shoulder. The head at the bottom, second shoulder. This is how we use RSI in conjunction with the horizontal price levels. If we had stayed long or if we'd re-entered 204, we're at 207.26. Look at the RSI. Now it's above 70. Are we in an active period of time? We are. Are we closing at new highs? We are. Where could Pound Yen go? I'll tell you. I think the number is 209. I'll go to a 4-hour chart, as I promised, and I'll show you why. Now, the 4-hour chart, the longer-term charts, it's going to take a little bit more trading volatility to get these RSIs above 70 or below 30. Look at this triple top, though. On April, the first top of this triple top was April, 18th? 209.01. The second high, 208.62. The third high, 209.04. 209 is important. Most recently, we went to 209.34. Then we sold off. Going long here at 30, well, not 30. The RSI was not at 30 in the 4-hour chart. 204.65 would have been appropriate. I think we go back to 209. And notice the RSI did not cross back below 30. It did go above 70, telling us a good spot to sell shorts. But this looks more like a range-bound market on a longer-term price scale. On a 4-hour chart, it looks like a range-bound market. On a 1-hour chart, it's trendy. This can happen. Markets can trend on short-term charts and play the range on long-term charts at the same time. Are you drawing your support and resistance lines on a time frame you're trading, or also on higher one as well? It's a great question. I will start with the daily charts and draw support and resistance lines and then move down. Why do we not enter when we are below 30? Is this based, this is a 1-hour chart? Well, officially the RSI never went below 30. Let me zoom in. It did not, well, it did go below 30 back here. This would have been a good spot to go long. Yes, it would have. Absolutely. ZBYS. Over here, it did not, but it was a horizontal line that marked the neckline of Apostle up and upside down head and shoulders. If there's any other currency pairs you'd like to see, please don't hesitate. Let me know, by the way. We're more than happy to queue them right up. But as far as the cable yen, it gave us a great entry to go long when the RSI crossed back above 30 near the 204, 204.60 level. If we had stayed long, guess what? We probably could even have added to this trade at this point. Is it too high to buy? It's never really too high to buy, as they say. And obviously, the RSI, to get out of this trade, 2 criteria. Either the RSI crosses back below 70, then I'm going to get out of the trade. Or if we hit this 209 level and show signs of resistance. I might get out of the trade as well. What else do we have cooking? Any questions at all, please don't hesitate. Here's the Aussie dollar. I'm watching this very, very closely over the past few months. Let me refresh my charts. Going to a daily chart first for the Aussie dollar. It's very, very interesting. I'll cue up the RSI in a second. And just to recap, the RSI can be used in range-bound and trending markets. Just please be aware of the time zone. All right, this is a daily chart. This white line that I marked is 95.40 in my charts. It represents what was the 24-year contract high in the Aussie dollar. We went up to new highs, 96.53. Uptrending support level, I just connected the significant lows. Very, very simple. Well, we're traders, not analysts. Let's go to a 4-hour chart. Let's try to find a trade out of this. Let's plug in the RSI as well. And then we'll zoom in. Most recently, what was the trade signal? Trade signal was RSI goes above 70. The market goes not only to new high, guess what? It goes to a 24-year high. Well, to go long here, 95.40, we dip back down to 95.09. We did not go back below the 9,500. As a personal rule of thumb, I like to focus on the large round figures, 9,500, 9,600, 97, etc. when placing the stops, protective stops. I want to place my protective stop on the other side of the large round figure. So if this is my support at 95.40, my stop is below 95. If my stop was at 97.17, my stop would be at least below 97. ZBY brings a good point, though. As one always needs to be mindful of RSI's lagging indicators so that they can oscillators should use the tools themselves. Yeah, you know, listen, it's absolutely, you're absolutely correct. Anil, I believe it's the SMA. I believe, if you go on Google, you can find the actual mathematical calculation for the RSI. I believe they use a simple moving average. If somebody knows better, please correct me, though. It's true. The RSI is a lagging indicator. The RSI is really waiting, and this is why I think it's very powerful. Use the lagging personality of the RSI, or any indicator for that matter. All indicators are really lagging. They can't predict future price. Use the lagging trait of the RSI to our advantage. I want to buy. I want to buy not when the market goes to new high, because the market can go to new highs a lot of times. I want to buy only when the RSI tells me. When the RSI finally, if you think about it this way, wakes up and says, hey, Adam, wake up. The market's at the new high, but we're really going up. You know, I'm above 70. Or the market's really selling off. We're not only at a little bit of a new low. The RSI is below 30. This is the real deal. So I want to wait for the RSI to catch up. And that means, yeah, listen, I might not get the top or bottom of the market, but I'm going to get the most consistent moves. You know, so many often I think new traders, including myself at one point, you know, you make the mistake, or I make the mistake, that I have to try to catch the top and bottom and be the expert of the market. It's impossible. It really is. There's too many currency pairs. There's too many factors. There's too much randomness in the market. I want to take the safest trade. Think about it this way. I could tell you, I have 100 trade signals for you. Only 30 of them are going to actually make money. 70 of them are going to lose money, but I have 100 trade signals for you. Or I could tell you, listen, I have 20 trade signals for you, and about 60 or 70% of those will make money, and only about 30 or 40% will lose money. Or I could say, listen, the same period of time, I have 3 trade signals for you. Let's say 10 trade signals. But 8 out of 10 are going to make money. I want to take the fewest amount of trade signals, but accept those trade signals with the greatest probabilities of success. This is exactly why I don't like to use the 50 line, the 50 level, the median line on the RSI, the center of the RSI. I don't like to use that. The RSI has the greatest chance to go to 50. It's the center of the range of the relative strength index. This tells me we're just trading when the RSI is at 50, we're trading at its average. Really doesn't tell me much. But when we go above 70 or above 80 and then cross back down, it tells us this is a little bit of an anomaly. Most of the time, the RSI will not be above 70. But when it's above 70, the market is unusually strong. When it's below 30, it's unusually weak. And then the reversal, we have a greater probability of actually being right. Why am I going long with the RSI above 70? It's a great question. Because when the RSI, and this only again can be applied during active market sessions, but when the RSI for the first time only, I forgot to mention this before, when the RSI crosses above 70 for the first time only, we don't know how much further it could go. Remember, the short signal occurs when the RSI crosses back below 70, not when it's above. When the RSI is above 70, it tells us the market is firing at all cylinders and it has the potential to move that much more. So I want to buy only the first time when the market goes above 70, only when the market's in an active period, and only when the market closes a new high, a new significant high. We have a few minutes left. If you have any questions, please don't hesitate to chat them in. If there's any other currency pairs you'd like to see in particular, please don't hesitate as well. I'd love to show you anything I have access to. Let me see if I find something interesting. You know what's been very, very active lately? I'll tell you this, the Kiwi dollar. Let me zoom in. Let me take a snapshot of the Kiwi dollar. This Kiwi dollar has been out of control to the downside. It has been unbelievable. Let me start, and this is exactly how it started. I mean, I would start with a daily chart, but for the sake of time, connect significant highs, significant lows. Disregard this candlestick wick if we can connect more significant highs more recently. Let's zoom out a little bit, get a bigger picture. And we see the Kiwi dollar to the downside, connect to significant lows. I did a pretty good job of capturing the range. Well, most recently, hey, look at this. The Kiwi dollar, double top, and a reversal. Let's play the woulda, shoulda, coulda game. What coulda, shoulda done? RSI crosses above 70. I'll refresh my charts. RSI crosses above 70. Market is strong. RSI immediately crosses back below 70. Not a bad spot to sell short. The highs at that time were 78.96. That's close to the 79 figure. Place our stops above 79. Would we go 79.17 on a 4-hour chart? Only 17 pips higher than the figure. Not too bad. Hopefully, if our stops are not too close, we would have been in trade. Now the RSI goes down. The market goes down from 79. We hit low 77.67. 237 pips. Not too bad. But maybe fundamentally long-term we think the Kiwi dollar goes down more. Maybe we close a trade. Look at this. We connected again. The RSI did not go back below 70, but we did hit the trend line. We hit high 78.91. We never got back below 70. So we can sell short up here near 7,900. But look at here. The RSI crosses below 30. The market closes at a new low. Is it too low to sell short at 76.81? Well, we're at 76.46 right now after seeing lows at 76.14. So it's never really too low to buy, too low to sell, too high to buy. And the recent lows are near 75.39. Now, of course, if the RSI crosses back above 30, I'd want to get out of the entire trade because that could be indicative of another reversal to the upside. Given that we have a few minutes left, I want to mention really quickly that if you have any questions, you can always contact me at my site, www.forexlounge.com. I don't remember how to type here. We offer almost 40 hours of live trading sessions every week. We hold your hand through the trades. We have a live trade messenger that delivers signals to your desktop 24 hours a day. We have a lot of fun stuff, and we have a very, very cool Forex Lounge game. You guess on charts, and you can win very valuable prizes. They're getting better all the time. I want to thank you all very, very much for joining us. Always a sincere pleasure. Thank you very much, FX Street. Always a gracious host. We have one more question really quick. Andrew, if the RSI is above 70 on hour but not on the minute, the reason we get in is the reason we get out. If I take my trade on 1-hour charts, I stick to 1-hour charts, and I never use 1-minute charts. But I stick to the same time frame. Thank you again, FX Street. Thank you very much for everybody for joining us. Consult FX Street's calendar. I'll be back. Everybody have a great day. All profitable trades.